Okay, so this is Intermediate Accounting 2, Chapter 15 problem. This would be a great problem that you might see on the exam. It's relating to purchasing or selling and issuing stock, purchasing it back, and then reselling it. And how do we account for it from a simple journal entry standpoint so we can book it in our financials. So the way that we do this is, let's look at this problem. Babel Company issued 200,000 shares of $15 par common stock for $6.6 million. A year later, Babel acquired 25,000 shares of its own common stock at 20. 3 months later, it sold those same shares at $23 per share. Not all of them, but it sold 15,000 of those shares at $23 per share. So Babel Company uses the cost method to record treasury stock transactions. So we're going to prepare 3 journal entries. It's actually recording when Babel Company issued the stock, acquired the stock, and sold the 15,000 shares of the same stock acquired. So how do we account for that? Well, a couple of things that we know right off the bat. We know initially on the journal entry, which is going to be right here, and let me adjust my size for the pen. We have a simple journal entry, okay, and we know we got cash when we originally issued the stock. Well, how much cash did we get? Well, we know we got $6.6 million worth of stock, okay? So because we got $6.6 million in cash, we're going to debit, right, because we increased our cash, so we're going to debit by $6.6 million, okay? So there's 6.6 million. Then the thing that we issued was we have a common stock, right? So we issued common stock, but what do we issue at? We issue it at par value. Well, we issued 200,000 shares times $15 per share because that was the par value. So then we have to credit $3 million. Okay? So this is given. This is given. The difference is what we call paid in capital excess of par, and that is going to be $3.6 million. Okay? And that's how we put regular plug. So nothing real fancy with this, right? It's very simple. We debit our cash, we credit our common stock, we credit our paid in capital and excess of par. Now, what's happened now is Babel Company decided to acquire some of its stock back. And so we have to figure out, well, what method do they use? Do they use the cost method or do they use the par value method? Well, we know, based on the problem, they use the cost method. So if they use the cost method, then all we simply have to do is record the purchase back at cost. So we have a treasury stock. Anytime we buy back our own stock, we call that treasury stock. And what do we buy it back for? So a year later, Babel acquired 25,000 shares, and we bought it for $20 per share. So that's going to give me $500,000 that I bought it for. So I'm going to debit my treasury stock for $500,000. And what did I use to buy the treasury stock? I bought it with cash. So I'm going to credit my cash of $500,000. Okay? So now this is sort of where a little bit of a tricky. It's really not that difficult, but it's just sort of almost like we have to memorize what we do. Now we resold the stock. 3 months later, that same 25,000 shares we bought, 3 months later, we resold 15,000 of that 25,000 shares. And we sold it for $23 a share. Well, we know right off the bat, because we sold it, we got cash proceeds. So the cash that we got was 15,000 times $23 a share. That's going to give me $345,000. Okay? Then we have to credit our treasury stock, right? Because that's what we resold. But because we resold the treasury stock, what we have to do is we have to record it at this level, which is what? $20 per share. So $20 times how many shares do we resell the stock for. We sold $20 is what we bought it for. We sold 15,000 shares, so that's going to give me at $300,000. And like I said, this is $20 times 15,000, okay, shares. And then the difference is going to be our plug. And what is that plug? It's paid in capital, and we call that treasury stock. And what's the difference? It's going to be $45,000. So $345,000 is the cash proceeds, $300,000 is the treasury stock, $45,000. This is really our plug, okay? And we said that this is our plug, and this is really sort of a multiplication on Journal 2. Okay, so that's pretty much how you do Chapter 15, one of these problems with issuing, buying, and reselling stock.